So you're thinking about doing a refinance. Well, probably a good idea. I did. When the rates come down, you want to take advantage of them, right? So I'm going to consider just how much real savings there are and kind of the break-even point. Because if you're not planning on being in your principal residence, or it could be a second home for more than 2 years, it may not pay to do it. Keep in mind, mortgage interest is deductible up to $100,000 on a home equity loan and $1 million on a home acquisition. Now, this can be, again, for a second home as well, and it can be for a refinance. With the lower rate, you will have a lower payment as long as it's, you know, rate and term refinance instead of a cash out. So same debt, lower payment, but let's see really what the savings are. Now, first of all, you've got to add up all the loan costs, appraisal fees, loan origination, mortgage insurance, appraisals, inspections, recording, survey fees, title insurance, credit reports. It really can add up. Keep in mind, mortgage insurance, you could be locked into a 5-year mortgage insurance program as well. Now, the next thing is you take a look at your drop in your house payment, which is fundamentally why you want to do this most of the time, right? So let's say you have a $500 drop in your mortgage payment. It's a substantial amount there. And let's say you're in the 30% tax bracket. So tax savings would normally be 30% of $500 or $150 tax savings. So you would have had that deduction, but now you don't. So you're giving up $150. So the $500 mortgage payment reduction really has to be reduced by the $150 to get the net benefit to you, which is net savings $350 a month. Now, you take that total number of the loan cost figure on the loan, let's say $6,000. So they're your loan costs, all the costs I mentioned to you. Divide $6,000, the loan costs, by $350, the drop in your net mortgage payment cost. That's 17 months. So you'd want to live in the property at least 17 months to get a break even, or it could be a second home. If you're not going to be there that long, probably isn't a good idea to do the refinance. Now, without points, your rate may be a little higher, so keep that in mind. And also on an older mortgage, there may be prepayment penalties as well. So check into that as well.